right, I'm going to mute us real quick and get us, let's just try it. Welcome to Title Adam in the House, the podcast where Florida real estate gets real. Buyers, sellers, builders, lenders. If you're in the game, then you belong in the house. Let's get you to the closing table faster and with less stress. Let's go. Hey everybody, what's up? It's Title Adam. I'm in the house. I'm coming to you from the Sunny Studios, Premier Reputation Title in Estero, Florida. I've got my guest today, Nate Perez. I've been waiting to talk to this guy face to face for a long time. We've done some business together. Nate, thanks for coming on, man. How are you?
Of course, man. It's a pleasure, man. It's a beautiful day.
Yeah, this is great. As a matter of fact, it's hot outside. We're both mopping ourselves off as we get ready to hop on the camera here and give you some content that you can really use. My name is Adam and I do title, and you can call me Title Adam, but I don't want to just talk about title. So if we have a great episode today on the podcast, Nate, we'll walk away with a couple of things. One, I'll be able to share some information about you and your business.
Yeah.
I'll be able to plug my business. If you're buying, selling, building, refinancing, or doing a deal, tag me in as your title insurance agent. And number three, we'll be able to walk away maybe with a little bit of insight that goes above and beyond the superficial candy-coated BS that we hear on just about every podcast. So I know everybody's got a podcast, and I know you're being a good sport for coming on with me. So thanks again for being here. Wanted to just jump right into it and ask you. Now, I checked interest rates today. 30-year fix is averaging right about 6.75%. Does that sound?
Yeah.
Okay. For those buyers that are on the fence, and I know that there's a lot of them out there, for those buyers that are on the fence, how big is the window for them to jump when the rates should come down?
Well, the way that I see it is that everybody's trying to time the market. And I feel like if you try to time the market, you're setting yourself up for failure. So I think the biggest thing that the buyers should do is just focus on getting pre-qualified to see where they're at, because don't try to find the perfect situation, because the perfect situation doesn't exist, and it gets in the way of a situation that's probably good and we can purchase now. Mm-hmm. And then what I'd say is date the rate, and then once the rates come down, whatever that time frame is, you refinance. But don't try to time the market.
So you would say, though, you're a date the rate guy.
Yeah, 100%.
You're saying get the home now, secure the neighborhood you like, the school district that you like, the amenities of the neighborhood that you like, and then worry about the financial piece of it later, because history has shown those rates are going to come down.
Yeah, and the same people that try to time it before during COVID, when they're like, oh, I'll keep waiting until rates drop even more, even though when they're at 2%, they shot up. Mm-hmm. So it's one of those situations where it's, when rates are down, prices go up, and when rates go up, prices come down. They kind of balance each other out. So let's just see what your case looks like, what makes sense for you, and let's get you in. And because at the end of the day, rent's 100% interest.
Right.
So let's get you in, let's get you pre-qualified, and then let's make your dream a reality. That's the way I see it.
So yeah, when you're renting, you get nothing for the experience.
100%.
Okay. Well, and so I thought about that a little bit, and I wondered, sometimes with the mortgage rates, when they start changing, it seems like they go up faster than they come down.
Yes.
So when we see rates dropping, are we looking at intraday price drops, or are we looking at pretty much the rate comes out at 9 a.m. from the investor from UWM,
right.
and then that's what it's going to be, versus when rates are in an upward environment, we're seeing midday changes and people really getting caught with their pants down?
No, it's intraday. Essentially, I get notifications sometimes by the hour, every 3 hours, or sometimes it depends on the volatility of the day. Mm-hmm. There are days where the market maybe shifts maybe 2 to 3 times, and it's just a couple basis points. And then there's days where the market's just completely volatile. Well, 1 hour is just, pricing has improved. Next hour, it's worsened. So I try not to pay attention to that personally, because if not, it would be micromanaging what the market's doing.
Sure.
What I got to do is, once I get a contract or once I get a refi, I got to lock them in right there, because the market's so volatile. I don't know what's going to happen tomorrow. I don't know what's going to happen in 6 hours from now. So what I got to do is protect my consumer and make sure that they have the rate there. And then let's just say that the market improves. Well, I'm a mortgage broker, so I can switch them to another lender and then get them a better deal. So it's one of those situations where, the market shifts. It's not shifting with too much volatility right now, but it's not something I particularly pay attention to, because what I do is I lock in right then and there to protect my consumer.
So you would say, when you meet the customer for the first time, you're taking that loan application, and they've got a property,
right?
You're looking to lock them in right away.
Yeah, I'm not taking risks.
No risk.
Because it taught me a lesson, because with how the market is and where everything's at right now, there's too many variables up in the air, where if you're betting to wait for pricing to improve or anything, you're betting to lose. It's one of those situations where let's just go with what's right here, right now. This is the worst. If we lock it in, this is the worst. The market could improve tomorrow by a lot or next week, and then we can, shop around. But we got to lock in the worst now, because I remember around 2022 and 3 when rates started shooting up, and many people were still floating these rates trying to see if they would go down. They didn't go down, and deals died.
They were completely removed from the market. Gone.
So now I don't take any risks. I just go, hey, this is the interest rate today. If they come down, I'll shop around another lender. We'll figure it out then. But right now, this is what we're doing.
And that answers that was my follow-up question, was how in the hell do you manage a pipeline of buyers that are on the fence with, rate volatility? So your approach is, let's go ahead and knock it out. So then I go back to, how knick-knacked are you by the consumer who, hey, I heard the Fed dropped the prime rate a quarter.
Right.
Can I get a better rate? I mean,
right.
What's your float down look like? Are you really floating down a lot? Is it something that, so it's for the peace of mind?
Right.
Yeah.
Yeah. So whenever the Fed does something, it doesn't really correlate to the markets. So people do call it. Listen, it's a great opportunity, to be like, yeah, you're looking to buy, you know, but in reality, no, I just tell them, hey, your rates are good. And then if they're really that, I would say if they're really that nervous, or they really are really hands-on the transaction, I'd say, come on right in. Let's look at the rate sheet. And then I sit them down. I explain, hey, this is the cost today compared to when we locked. They're around the same. Let's just stay where we're at. I treat my consumers with velvet gloves, because this is the biggest decision that they're making in their lives. So if they want to come in and just want to double check and make sure and double check the rates, come right in. Don't worry about it.
Yeah, but that's almost like me going into Publix and saying to the seafood department, the price of shrimp is down.
Right.
Get me a better price from the boat. I mean, at some point, there has to be either a threshold that, if it's an eighth or less, we're not going to renegotiate, because the buyer has to remember that you're not going back to them if the market craps out.
Right.
And saying, hey, my pricing's way worse.
Right.
I need you to take a higher rate. So it's not a, it seems like there would have to be some kind of minimum that, hey, the market would have to move this much before we could even have a real conversation about a float down.
I would say that it would have to be, for me, depending on the deal, quarter to half.
In the rate, not the price, right?
It's got to be the combination of both.
Yeah.
Because at the end, go rate, that's one thing, but pricing is another. So I got to look at where the cash to close is at. Sometimes I had situations in the past that's not as common now, where the client wants the same rate, but with the new lender, they're getting $3,000 more in credit. So it depends on the situation and what I'm looking for with the borrower, and then I'll determine, hey, let's go down this route. But most of the time, right now, I'm like, let's stay put. Let's not risk anything. I always check the markets. I see, because I have my LOS platform has multiple lenders on there. I'm constantly looking, and I don't really see anything beneficial to my consumer. I just don't do anything. Yeah. I tell them, I'll be like, hey, I'm looking at rates right now. There's nothing going on. Let's keep pushing where we're at.
Well, I think if they see that you're on top of it, they feel comfortable. It's if they're getting all their information from Zillow or bankrate.com or one of these places, and they don't know that you already are looking at that, so that they don't have to. That would be like someone searching their own title with
100%.
me. Yeah. That makes a lot of sense. That makes a lot of sense. This was a great intro. We should probably stop for a second though and just introduce you.
Okay.
Please.
Where do we start?
Well, let's start with your name. It's Nate Perez. It's Nate for me, but is it Nathanael?
It is Nathanael Perez. Okay. Well, I was born in New York, Bronx, New York. I lived in New Jersey for a couple of years. I've lived here for most of my life. I moved down here in 2006 with my family, and the mortgage game is in my blood. I have an uncle that's currently a retail office manager. My father owns the mortgage company, and it's one of those things where it was destined to be.
Now, is that LEN Financial Services or LEN Financial Services?
LEN Financial, and there's a meaning behind that. So family is a very big thing when it comes to my family, because my parents, it's honestly really cool. My parents sacrificed a lot. For example, when my dad used to work at a steel factory making signs, and my mom would be taking care of me. My dad had to get up at 4 in the morning to catch the train.
Is it Jersey?
It's New York.
New York, okay.
Yeah. So once they started, my dad got his mortgage license, and it was a struggle. They bought their first property. It was a shithole. My dad's first office was literally the basement of the first house, and it was covered in mud. And his first desk was a door. And
Wow.
when my mom would flush upstairs, it would leak. So he would have to remove the documents. So the struggle was
coffee
real.
stain, yeah.
The struggle was real.
Yeah.
And
Well, how did Dad get into mortgage, though? How do you go from making signs to that? He had to have known someone, or someone had to have seen something in him?
don't know I don't recall exactly how I got into it, but I remember what he told me, the reasoning. He says, my life is meant for more than this. He says, when I'm 60, I want to be able to walk up straight. He says, this is going to kill me.
Mm-hmm.
And then I don't know exactly what transpired, but I remember that being the main thing.
Yeah, there was a moment.
There's a moment, a paradigm shift completely that changed his life.
Yeah.
And then he went to a couple of lenders, and then he went to Wells Fargo, and then the '08 thing happened, and then we moved down here right around '06, right before Lehman Brothers collapsed.
Times were good when you moved down.
Yes.
Yeah.
Yeah. But my dad told me that he started to see cracks in the bubble, which made him why he moved down here. And then in 2012, he opened up Lev Financial Services. So we value family very deeply. And LEN stands for Louis, Estella, Nathaniel, which is our three names.
That's it.
So whenever I represent Len Financial, I represent that very personally because I see it as my family's legacy. Everything that my father and my mother went through, all the sacrifices, all the tears, all the tribulations, coming here as immigrants. This is what this came to.
Yeah.
And now it's up to me to take it to the stars, which is where I plan to take it.
Now, and you're still young in your career. You're in your first decade. Of lending,
like
right?
half a decade, less than half a decade.
Now,
Yeah.
is Dad still writing?
Nope. I'm handling all the mortgage stuff. I'm working on when it comes to the scaling of the company. And right now my dad's focused on building houses.
That's awesome.
No, my dad doesn't stop. He's my dad's an animal. Yeah. Like he doesn't, every weekend he has some house project going on. Like my dad is a guy that is always on the move.
Yeah.
And then my mother is that mother where she makes sure everybody's okay. But if she got to get her hands dirty too, she'll do it. And that's been the success of everything that we've built.
Yeah, it takes a village. That's a
100%.
family. And, I'm in a family business myself.
Right.
We're powered by Premier Reputation Title, but Juliet's joined the business this year. And she's finishing her first 6 months as a licensed title agent as well. And so you go, it's a shift into legacy planning. It's a shift into, building something.
No, and it's the American dream.
Yeah, man.
Coming over and going through what he went through, or what they went through together, and coming to this, where your son is now taking the company, where your son is going to UWM, getting like notoriety on a podcast. Like they would have never thought of these things. So it shows the beauty of hard work, sacrifice, family. It leads to moments like this where we're at right now.
Yeah, sure.
Yeah.
But on the way here, there had to have been some dark skies, because I'm telling you moved down here in '06, the market crashes out '08, '09. You're watching Dad, there was probably some pretty good modification work going on even then.
He was doing a bunch of modifications. And not only that, he had a hustle. He made a bunch of side businesses when it comes to, whatever the opportunity was. My dad is an opportunity man.
Yeah.
If everything's down and things are down and out, he finds opportunities. He's an entrepreneur.
Yeah.
So whenever mortgages were down and everything was dead and everything collapsed, he would do things and find things and do businesses that were maybe not long term, but they got us to a point where we were safe.
Yeah.
And I'll tell you this, I never felt it. I never felt '08. I never
Really?
never.
Yeah, Dad did good work.
No,
then.
my parents did an amazing work. And Christmas was always full of stuff. So that is something that I would say that, man, the universe, God blessed me with family that they protected me from everything, but they also made me a strong man that I am today, which is a strange duality.
Yeah.
Yeah. So
do you feel like now that you've been in the business, for a while though, do you think you would have benefited from maybe seeing behind the curtain in '08, '09 and seeing just how bad it could get? Because, Dad might have carried it through, but it was a tough time. I knew a lot of really good mortgage people that just went out of the business and found something else to do.
Well, so I was born in '98, so I was 10.
Yeah.
So it's one of those situations where it would have robbed me of my innocence.
Yeah, it might have hurt more than helped.
Yeah, psychologically, I guess.
Yeah.
Because this, or maybe it would have turned me into an animal, and I would have had an empire by now. Who knows?
Yeah.
But I am where I'm at now.
Yeah.
But it's one of those situations where it inspires me to become the father and the husband that my father represents.
Yeah.
When it comes to no matter what happens, I will find the solution, and my village will be protected.
Yeah.
And personally, that's in essence of what a family man does, no matter what it takes. So I get inspiration from that.
Yeah, that's really great, man. I love that. And you've got an office here in Fort Myers.
Yes.
Actually, not far from Page Field.
No.
You know I'm going to talk about the plane at some point, but I got to get into that. But before we do, I wanted to go just a little bit further into, we were talking a little bit about the rate transition. How often, with the rates where they are now and knowing that not everybody's going to qualify for the product that they actually walk in telling you that they're going to get, I'm getting a 30-year fixed. How often are you actually using, I would call skill in customizing a plan for a buyer, i.e. a 5-1 arm, so a 2-1 buy down, some kind of outside of the box to make it work today versus saying you don't qualify, gotta wait.
Right.
Do you ever find yourself really working in that space where you're saying, we can make this work?
All day, every day.
Okay.
You know this, Adam. Not every deal is cut straight through. There's always going to be some things that we're going to have to figure out as we structure. And I always find myself using everything in my tool shed at least once a week when it comes to 2-1 buy downs, arms. What I try to do is I try to build a very customized client experience so that they're getting exactly what they need. And that not only happens with, the 2-1 buy downs and the arms, it comes with the loan programs.
Yeah.
There are situations where these some loans are just, they cannot be covered by Fannie and Freddie or HUD.
Yeah.
So I have other routes where I can take my consumers and solve their problems because I'm a problem solver. So let's just say, for example, they're having a situation which is a beautiful time right now to be a buyer. Because it's turning to a buyer's market. So sellers are having to concede. They're going to have to give contributions. So once we have that leverage for you as a buyer, right? We are able to customize deals. We can use the seller contribution for the 2-1 buy down. We can use the seller contribution to reduce cash to close. So when it comes to me, I am using everything. I'm using everything to customize the client experience, and so that whenever they close, they would be like, Nate, Adam, and so realtor did a fantastic job. I'm happy with what they did.
So there's a lot of ways to get to that rate, and I think a lot of the average consumer doesn't know it. I sit at closing tables and I'll look at a form in every closing package that says like broker compensation.
Right.
We're paying Nate through the rate. We're
Right.
paying him through fees. And so some people don't realize that, maybe you don't need as big of a gift as you think you need.
Right.
Maybe you could use some of that towards buying the actual rate down. That said, are you finding that everyone's doing a 30-year today?
Yeah.
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 The whole 15-year, they're doing the 30 with the intention maybe of paying it off early, but they're not being seduced by that lower rate.
And there's another thing too. Right now, when it comes to the lower rate, I would say it's marginal. It's there, but it's marginal. But I also try to educate my consumers. I say, listen, you have the ability, especially self-employed consumers. I say, you have the ability to pay this loan in 10 years. But what if in 5 years you can't? And your payment's still the same? I said, keep it at a 30. And then start chopping away when you can, and when you can't, you got the lowest payment possible.
Yeah.
So what I try to set them up is future success. Not, the cash to close and we got the rate. No. We're talking about 30 years. Well, on average, it's 5 to 7 years when it comes to people staying at the house. But let's just say it's a full 30. There's a lot of things that can happen. So I say, keep the minimum payment as low as possible. And because there could be the hard times, and then what you do is whenever the things are good, just keep paying it down. And if business goes down for you, all right, you have the lower payment. Yeah. Versus if you do a 10-year loan, whether business is good or bad or whatever circumstances, you just lost your job as a W-2, you're still paying that high payment. Yeah. So
and lenders have made it a lot easier in recent years to make a principal reduction. It used to be kind of a big deal. You had to write a separate check. You had to write a letter in telling them exactly what to do. It might get applied to your escrow. And it might be in suspense as a partial payment. So banks and mortgage servicers have made it a lot easier to do that. And I see that form in there as well. I think that a lot of people only think that their income's going to go up and their expenses and debt's going to go down.
Right.
And I don't know a lot of people that actually happens to. I mean, I've joked and said, a good month is when my credit score and my savings goes up and my debt goes down. And there's not a lot of good months in life. If you're just being authentic and real, dude, one of those three is going to suffer just about every month when you're trying to make it through. And not only that,
if things were hunky-dory, why is U.S. credit debt, consumer debt, over $1 trillion?
With a T.
Baby, T.
Yeah, that's a lot.
So that's a lot of money. Yeah. So it shows that something's not working right now out there. People are relying more on credit cards. People are not making it right now. So that's why I try to ease off. I try to create a financial plan when it comes to the mortgage where in case things get tough, hey, the payment's the lowest. All right. Now, is it getting tougher for consumers out there? Most definitely.
Yeah.
And it's not even an aspect. It's just people are getting pummeled right now. When it comes to credit card debt, the interest rates on the credit card, I'd say it's predatory, man. It's predatory.
I can remember. Now, I was born in 80, so I'm a little bit older than you, but I can remember being of age to have a credit card and getting like 12 to 13% interest, and it being like, that's not too bad.
Right.
That's not bad for a credit card. And if you needed to buy something on it, it's not that big of a deal, dude. I don't have bad credit, but my offers are 26 to 35%.
That's insane.
That's it. That's the money that's easily obtainable to the public. And that's a problem, man, because that just digs them deeper and deeper and deeper into.
I started noticing there was a problem where consumers were to roll up in their car, and I see a $700 car payment. And I'm like, what's this car? Oh, that's my Corolla. And I'm like, what?
Yeah. Not a Corvette.
Not a Corvette, not an E-Class Mercedes, a Corolla with cloth seats.
Yep. Yeah.
And I'm like, that's
rolling the hand cranking the window
like,
down.
There's something wrong here. And then also no savings, things like that. But what I'm also here to do is that whenever a consumer is in a position where they cannot buy right now, I educate them and say, okay, let's make a plan. Okay, do you have ability to get a gift? Pay down this credit card, do this, do that. Because the financial system partially cares about the total amount of debt you have, but the bigger thing is your capacity to repay the debt based on the minimum payments.
Right.
That's the biggest thing. Because people say, oh, I can't buy because I got $50,000 worth of debt. Well, that's part of the truth, but if the payment is $100 a month of those $50,000, your DTI is pretty good.
Yep.
So
cares, not that they don't care about the balance, but it's that actual monthly nut.
Exactly, because they care about repayment. And once they see that, then we can figure out the numbers and make it work for you. So just because you have a high balance, it's not the end of the world. It's more about your minimum, payments. And then we'll work it out. I'll show you exactly how the financial system works. Because the financial system is not a person, it's an algorithmic computer that tells you, hey, I like this case, I don't like it. Hey, if you give me more of this, I'll like it. Yep. And you gotta figure out what you need to do to make it fall in love with the consumer. It's that simple. And then it tells you, it's like, I want more reserves. I want more this. I want more that.
Yep.
And then that's where I start guiding the consumer. We got to do this. We got to do that. What do you have, in your arsenal to cover this issue? And if you can't cover it now, okay, let's put the purchase on the side, work on that. And then once you're ready, come back.
And that's something that you're managing a process of. Is this 6 months? I guess it probably just depends on.
It depends on the consumer. There are situations, for example, where a consumer is ready in a day. And it could be, for example, let's just say the consumer's short. Abuelita, give them a $15,000 gift. There you go. Or versus there's some people that don't have any resources and they have to every penny save.
Yeah.
It depends.
Went to the casino last night. Could have happened. I don't know.
Right. So,
I don't know if a lender likes that though. Gambling winnings would be tough.
No, not really.
Yeah, you could probably make it work.
I'll make it work.
Well, now go back to the 2-1 buy down because I like the 2-1 buy down. I don't think that people talk about it enough. Let me just give a brief summary of what I know the 2-1 buy down to be. Right. Rates are 6.75%. Right. You pay a fee, and your interest rate for the first year would be 4.75%. It would go up the next year to 5.75%. And then every year after that would be at 6.75%. And that gives you an opportunity to kind of graduate into the payment. Correct. Do I understand it correctly?
Partially. So the way that it works is this is used primarily with seller contribution. Yeah. And let's just say that your interest rate is 6.5%, right? So the way that the lender uses this is that they'll take a portion of the seller contribution as they put it in escrow, right? So how they come up with a calculation with how much they need is they'll take the difference in savings between a 6.5 and a 4.5, and then they annualize it, and then that's how much they need for the first year in escrow. And then they'll do the 5.5.
So it's a subsidy.
6.5. Exactly. But here's the thing is that consumers, they see their mortgage statement and says, well, why is it showing 6.5? It's like, because your rate's actually 6.5. It's just that they're taking money out of an escrow account that's going to make it seem like it's a 4.5, but it's really a 6.5. Yeah.
Yep.
So that's how it works.
Yeah. Okay. So it's prepaying the interest.
Exactly.
That's it, man.
Right.
It's somebody putting it in a savings account, and then the lender just grabs a little bit out every month. Okay. That makes total sense, though. I could see why people want to do it. But Nate, when you put someone on a 2-1, you're not escaping the fact that they can't afford the home, because don't they qualify them on the fully indexed payment, or do they do it on the? Because I feel like they used to do it on the initial payment, and then people were getting in big trouble because it's like, yeah, you never qualified for the home, bro.
No. You have to qualify with the note rate today. The only thing is that it just alleviates you for 2 years to do what you got to do, whatever you want to do.
So it doesn't matter. It's not going to make you qualify doing a 2-1.
Exactly.
Yeah. It would just make you comfortable, because hopefully your income does go up in 2 years. Hopefully you got that raise, or that, your career is moving forward.
The financial system always runs things by worst case scenario.
Yeah.
Because it can only get worse.
Yep.
Right. Yep. So if your rate's a 7.5 and your 2-1 buy down is going to put you at 5.5, you're going to qualify based on that 7.5 note rate.
Yep.
That's how it works.
Yep. And no matter what happens, it's never going to go above the 7.5.
Correct.
Yeah.
Because it's 30-year fixed.
Yeah. I like looking at it the way that you described it, because I honestly, and I've been in mortgage, but I always looked at it more of like it's a true discount, and it's not a true discount, because it's just paid for. It's just paid a different way. You squeeze a balloon, and really with banking, no money is free, and nothing just comes out of the ether. It's got to come from somewhere.
And the reason why, I'm so good at explaining this now is because every single time I've used a 2-1 buy down at the closing table, they're like, why is my rate 6.5? And over time, I've been able to explain, no, it's like this. Okay, there's a document here. Okay, you see this? Yeah, you see this credit? Yeah, this is where this is going to go.
Yeah.
And they're like, oh, okay, thanks, Nick. Click. And then that's it.
Yeah.
And then they close. But yeah, that's how it works. Yeah.
So you are a broker.
Yes.
And you have different places that you can place loans. It's going to come down to the deal, but you're definitely have a UWM tattoo somewhere on your body.
Yeah.
Okay. So you're a UWM guy through and through. You love them. They love you. Yeah. Obviously, I listened to the podcast that you were on with them up at their event. I think it was a live podcast that they did. It was awesome, man. It was great to hear about
Appreciate it.
And congratulations on that. They have a lot of brokers that they work with. So what is it about Nate that when you walk into the building up there, you're just welcomed like a hero? I mean, I see on social media, they love you. What is it about UWM or the people there that you just really vibe with? You've selected them as it's your people.
Well, I'll start off with the first thing. The CEO, Matt Ishbia, to me, is one of the biggest inspirations. He's crazy. The guy's nuts. The guy got up for 13 years, went to the office at 3:30 in the morning, and brick by brick. It reminds me of my family, because his father started the mortgage company in the back of a supermarket, and little by little they grew. And then once he got out of college, he did the same thing, kind of what I did, where he was a paper boy when it comes to just like pushing paper. Like he was just fax stuff. He was a nobody. And that's the same thing that happened to me when I started. I graduated high school early, just to get my mortgage license.
I read that.
And
real estate license.
Yeah, both. Yeah. And I was like, man, I'm ready. Let's do it. And my dad's like, okay, start filing some paper. Because it's about, before you tell someone how to dig a hole, you better know how to do it yourself. And I saw the similarities, and I'm extremely ambitious, and I see what he's been able to do. So that's what got me hooked. And then the company culture is awesome. It's a campus. It's the whole thing is a living organism.
What city is that in, Nate?
It's in Pontiac, Michigan.
Pontiac.
Yeah. Like it's incredible. And then you see the scalability of where dreams can be taken. And he says it. He said, I never thought I'd make it this far. And look, he just bought an NBA team. So it's right. So I see it's mostly not necessarily about the company itself. It's more about what I see myself and what he represents. And he cares about people, he cares about culture, and he cares about doing things right by others. And for me, that's one of the reasons why he's one of my biggest inspirations as an entrepreneur, as a businessman, as a leader. Not only as a leader for a company, an industry leader, I aspire to be all those things.
Yeah, but you're not hip to hip with him every day. So clearly his vision is flowing down through the chain of command in his ranks. I mean, you're finding then the people that you're interfacing with, you probably have an account rep or something.
Yeah, account executive,
Yeah, okay. And I think I actually talked with him when we did a deal together. I feel like he was involved, something with the portal, and he might have emailed in too. So who's your account executive there?
My account executive is my boy Trevor. I love that guy.
Give him a shout out.
He's a great friend. He cares deeply. Like he's a guy that he's a personal friend, but also when it comes down to business, he doesn't mess around. He's a problem solver. He's there to help. And because at the end of the day, it's all about client experience. That's the number one thing. if the consumer's happy, everything is good. So the quicker that we solve problems, the quicker that we're in it together to save or protect situations from occurring is the best way to do it. And when you have an account executive, a title agent, a lender like UWM or others, and a realtor that we're all on the same page of there's no finger pointing, it's thumb pointing, and we're going to solve this together, there's no deal we can't close.
Yeah.
And that's why I love him so much, other than being a friend, is that he knows what I need from him. He's always there, and he's always willing to help out. And by the way, I'm working with him right now to get some UWM love to the exchange event with the Alea Group.
Yeah, we're going to have to talk about that before you go, too, because
Yeah.
I saw that even I was scrolling my timeline before you came in. Is Trevor here in Florida or is he
No,
up in
so
Michigan?
UWM's a company where Matt said everything's got to be in-house.
Okay.
Nobody's going to be working remote because he says, if I make a decision, it's got to be done right then and there. And it's all about control.
Yeah.
And it makes sense.
Yeah.
Because if you have everything centralized, the company will move. Well, you have more control of operations. You have more control of what's going on. And you don't have to be chasing people down. Yeah. If everything is centralized into one space, you have full domain of what's going on versus some other mortgage companies or lenders where they have branches. It's more fragmented.
Yeah.
It's just difference of culture.
Decentralized is the word that they use to try to float that BS, but really being together as a cohesive unit, it sounds like it works better for UWM that way.
I mean, they're the biggest. They've been the biggest, I think, for 4 years now.
Wow.
Yeah, when it comes to volume.
Now, Pontiac, Nate, because I worked for JP Morgan Chase for a while, and I feel like Pontiac might be one of those loan towns. Are there like multiple big banks, fulfillment, and do they just
Rocket.
basically... Yeah, okay.
Rocket's
so Rocket's up there.
in Detroit.
Detroit.
There's another one called AFR. They're not as big, but they're there. And then there's a couple lenders out there. There's another one named Town that I use. They're really good. They're a lot smaller. But yeah, it's one of those situations where once the automotive industry stepped out, the lenders came in.
Interesting.
Because and then that's just anecdotal. That's just what I think. So because if you see, like, you have Rocket, that's number 2 in contested when it comes to the largest lender in America. You got UWM. You got I got a couple more, but you got Town. So there's a big migration going over there when it comes to, there's a big broker shops out there too. So I don't know what kind of tax incentives they're getting to attract jobs, but it's working because they're killing it.
So if the competition is there, then let me ask, because the proof is in the pudding, how often are you seeing your support team at UWM being ganked over to Rocket or to Town or to, because if they're good, that's how it goes in any industry. The competition's always looking to, if you can't beat them, then make them join you. And do you see a lot of turnover in this industry specific to UWM, or do you feel like you've closed deals for, some time?
Are you asking about the staff at
your fulfillment team? Do you always have the same process, or are you aligned with a team or do you go round robin? How does that actually work?
Well, so the way that these lenders work is that you get assigned to an underwriter. It could be any underwriter. So you don't know these people directly. But when it comes to people that I deal with, for example, my account executives, these people are typically long-term. I've never had a huge turnover rate. I have a bunch of lines like Orion. Shout out to Nick Sherwood. I have, Trevor at UWM, Lena Howie with Plaza Home Mortgage. These are relationships that I've had for many years. Now, is the industry as a whole high turnover? Oh, yes, it is. It churns because it's just a constant machine of low margins, high productivity. And if you can't handle it, you're going to burn out. You're going to get out, especially being an employee at one of these companies, because these companies already prioritize money. And if you can't make it through it, all right, next.
Yeah.
That's how it is.
Yeah. And a lot of those, Tempe, Arizona is like that, where, they all but have buses going around to the different fulfillment centers, just, trying to hire a processor, an underwriter, something along those lines. And that's an interesting setup, because I'm with Premier Reputation Title, and I'm appointed through 3 different underwriters, companies, Westcor, First American, and AmTrust. And I write everything through Westcor. Mario is my personal friend. Same thing. He lives here local. We grab wings all the time. And I like that feeling of having a peer. Now, I'm spoiled, though, because every single deal that I write then means that I can call Mario and say, you're my underwriter. I'm not round robin. And I really like that a lot, because I feel like when you have somebody like that you can talk to, it makes a big difference. For me personally, I don't see Mario very often from a business standpoint. He'll
Right.
come in occasionally just to, say hi. Normally I'm catching him at Wicked Wings over on
Right.
Alico, or we're, heading over to the library and Gulf Coast Town Center. I don't know if you've been to either of those two, by the way, but I am going to shout it out real quick. The same guy owns the library,
Right.
Wicked Wings 2, and then he owns another little spot that's on 41, and I can't remember the name of the plaza or even the name of the place. But have you been to either of those?
No,
Any
what's
of
your
those?
preferred?
Wicked Wings, because I'm a
Really?
wings guy. I'm a wings guy.
Really?
I could eat wings 5 nights a week. Yeah.
Okay. What's preferred, like when it comes to like what? Okay, tossed in. What do you like them tossed in?
Medium with a side of hot
Okay. And the blue
And-
cheese?
ranch. Yeah, well, I could do either.
Okay,
whatever comes, I'm going to take.
Okay,
but I'm
okay,
going to do
okay.
a dip and dunk. Yeah.
Okay.
So we spend a little bit of time doing that, and we really find that the majority of work that we're doing is really just on calibrating personally. Do we like working with each other? We still, and just really giving each other good feedback and helping build each other up, because I think that a lot of people are inauthentic. A lot of people are presenting an image, and we know why they do it, but it doesn't, you need somebody that you can kind of cut that with and be yourself. And so I've got that in my underwriter, and I'm glad to have one that I can just use consistently. But obviously with the volume that you're doing, they couldn't just have one. They've got to round robin them. But would you say that overall, do you see the same name coming up as applications go through, where you're building a rapport with that underwriter and they know, oh, it's Nate's deal, it's going to be clean?
I get assigned to pods. Like, so a pod of underwriters, like 15 underwriters, but it's not just for me. It's like also for other broker accounts too. And then I typically see the typical 3 or 4 FHA underwriters I typically deal with, conventional underwriters that I deal with, VA underwriters, but then sometimes it gets shaken up and I get assigned to another pod. It happens because UWM and other lenders care about, we constantly shake things up because we don't want things to get comfortable. We want to keep everybody on their toes. And you know what I like about what UWM did? UWM set the precedent on customer service, not for you, not for not for clients or realtors, but for us. Because there was a point in time where lenders wouldn't even pick up the phone. Like, let's just, like, I had a problem. Like, and the agent, the client, the title company's down my neck trying to find answers. There would be times where nobody would pick up the phone, nobody would respond to emails, and at the end of the day, to the rest of the world, I am the lender. So I'm the one that's failing.
It's you.
It's
that's
me.
not picking up the phone.
But once UWM came around and really shook the game up, because they have a 98% like pickup rate when it comes to phone calls.
That's pretty good.
That's crazy. And and whenever I have an issue with an underwriter, I call. And if that underwriter's not there because they're at lunch, the underwriter next to them picks up the phone. And they set the precedent, and more lenders are adapting this, which if they provide a better experience for me, I can provide a better experience to my consumers. It's all trickle down.
It all flows down at the table. Yeah, and you're the guy that hoists the trophy or that gets laid out on the altar for the sacrifice.
100%.
So yeah, that's...
I've been both.
Yeah, right.
I've been both.
And that's... Wow. Yeah, that's a tough one. But I think that switching up the underwriters is good. I think that it probably reduces fraud.
Right.
With people working together, loan officers and underwriters working together. But, I think that overall, a lot of times that people don't understand how that actually works. So Nate's got, he's working the deal from down here, but you actually have boots on the ground. You have an advocate that's just waiting for your call. Trevor, he's in the site.
Right.
And you might call him and say, I don't agree with this underwriter.
Right.
Does that happen a lot, or are you normally able to just kind of deal with the underwriter? Or do you just go right to Trevor?
Okay, so it depends on the lender, because underwriter communication varies lender to lender. Most of the time, I don't have issues with the underwriter. But when I do, I go to my account executive and I'm like, hey, here's the problem. Here's what's going on with me. What do you recommend me to do? Because they represent me, but they know also the hierarchy of communication that's in the company, or who I could jump across to see who I can get. When it comes to UWM specifically, account executives are typically hands off because they believe that it only clogs the system. So they have like a ticket system where I have an issue and I submit a ticket and they have to resolve it within 4 hours, like mandatory. So there's never a situation where something gets dropped off, something gets missing. UWM and also newer lenders are adopting systems where it's more automation, where I don't have to go to my account executive anymore. It's more of me submitting a ticket, and there's a time frame when they need to fill that ticket, and then it's just pop, nonstop. So that's why I'm able to close loans in 9 days.
Yeah, but to your point though, in the old days when you had a guy, that guy would just clog the entire pipeline up, and only that guy's people would get taken care of. And when you have
100%.
a first in, first out, or a ticketing system like
Yeah,
that,
yeah.
and a lot of people are doing that now, it makes a lot of sense.
100%.
Now,
Less chefs in the kitchen.
Right. Exactly. Right.
Yeah.
Exactly. And you might have a chef, and then you might have a sous chef, but you're not going to have two head chefs, And so,
Exactly.
But I wanted to say though, because I've closed 2 deals with you.
Yeah.
I closed a purchase and a refi with you. And as the title insurance agent, I don't really get involved with the UWM team very much until we get down to it. And when we get down to it is when it really matters.
Yeah.
And I can say on those times that they pick up the phone.
Yep.
I can say that they don't go home until it's done.
Yeah.
And I can say that customer service has been fantastic. So not to glaze them, like I work with a lot of lenders and a lot of different banks. They clearly have earned their spot
100%.
because they have the tools, the talent, and the treasure, and they have the technology. Their portal's really good. I have to say that sometimes I push back and want to have them do the portal for me, right? I know I'm not the first person that's ever done that, but we play this little dance, and sometimes they've even done it for me.
Yeah.
But I think on the last one you had said, Adam, it's not that hard. I walk you through it.
Right.
Get on there and do it.
Right.
And if I make sure my fees are right, you make sure your fees are right, we'll close.
And here's the thing too, regarding lenders like UWM or whatever lenders you want to work with, is that they are only a tool. It's the way, for example, this is why it's so important as to who you work with broker-wise. Because UWM or these lenders could be fantastic, but the broker is the front-facing individual that knows how to utilize these tools to the benefit of you as a title agent, the consumer, and the realtor. So UWM doesn't stop a shitty broker being a shitty broker. Right. So it's one of those situations where if you're a good broker and you're using all the tools at your vicinity and you're able to customize a client experience and improve it by making your life easier, the realtor's life easier, and the client's life easier, it doesn't matter if it's UWM or not. It's more about the broker and how organized they are, what structure they have. But thank God there's lenders like UWM that have made our lives so much easier through technology, because they're the multi-billion-dollar company. I'm not. I'm competing with Security National. I'm competing with all these lenders that I do not have right now the funding to go up head to head.
Right.
But these lenders like UWM, they're 100% broker focused, and like, we got you.
Yep.
You got the technology.
Yep.
So, but it also depends if I use it. It all depends on me.
Yeah.
And that's kind of how that works.
Well, let me ask you this, and this is one of those things where I don't know if it's appropriate to ask you or not, but if you write a bad loan, do you get a clawback on that?
What do you mean by a bad loan?
A loan that defaults in the first 6 months. Do they come back to you and say, hey, this paper wasn't good? Are you protected through the underwriting process, the policies and procedures and guidelines that if you wrote the loan?
They can come back to you. They can come back to you, but I don't have to repurchase the loan because I'm not the lender, but I would have to give up my commission.
Yeah.
But that's only under like insane situations, because whenever those things happen, the file goes under an audit. And then if I had no foul play at all, it's not my issue.
Accidents happen.
Right. But if there is, then it gets scrutinized, and that's what kind of shit hits the fan, honestly.
I think it's happened to good people that didn't realize that it was a bad loan.
No, and here's the thing too. Unfortunately, there are consumers, especially now with technology, they're really good at falsifying documents.
Yeah.
And then we take these documents sometimes, and it checks out.
Yep.
It checks out.
Yep.
And then something happens down the line, and they come back, and they go like,
forensic audit.
Oh man.
Yeah.
And then you're like, you're like, oh my God, I might lose, excuse my French.
Yeah.
I might lose my license over this asshole.
Yeah. Yeah.
And so
this is it.
But like I said, so there's a whole due process. Thank God it hasn't happened to me, but I've heard nightmare stories, and I'm like, God, keep me away from that, because it's a lot of liability to be a title agent, to be a broker. We can lose our license practically over nothing.
Yeah. It doesn't take much at all.
It doesn't take much at all. So that's why systems are always important. Organization, always having protocol and how you take documents, how you vet everything, because unfortunately there might be a day where you might get audited and they might find something that even though it's not you, but it falls in your lap.
Yep.
and you don't want that.
Yep. Happens all the time.
Yeah.
Man, that's a scary one, but it happens. Fraud is really big. Any content that I put out, I always try to mention, it's not a matter of if you're going to get hit with fraud, it's a matter of when and how bad the hit will be. These people are smart, man. I mean, you talk about not even the fake ID, not even the pay stub, the W-2, which has always been fairly easy, I think, in Photoshop or, to do. I'm talking about fabricating a FaceTime call with me on it, telling you, yes, change the bank for your wire and send it to. And you
really?
know when you do. Yeah, it's bad. It's bad,
That's
man.
crazy.
The fraud is so bad right now, and the people are so smart that we almost are coming to a spot where we're going to have to uncouple from technology just a little bit. And we're talking about this today with Bobby Joe, who's my executive from First American. She was in here, and we're saying, at some point we said, I don't want to schedule an appointment with my banker and go in to do a wire transfer. I should be able to do it from this smartphone that I'm holding right here. Huh. And it used to be that you went in, you sat down with the banker, they asked you a couple questions, make sure that you weren't being, abused or anything like that.
Or anything like
coerced.
That. Right.
And then they would call me and verify the wiring instructions were right to the digit. And then they would submit the wire, and then they would go to their boss or another banker, and they would say, hey, I got a wire I need you to release. And then they would go through a process, and then the wire would go.
Right.
And we said we need to save 12 minutes. It's more than 12 minutes, really. It is a convenience that the consumer should be able to have. But I start to wonder, should the average person be able to send $50,000 from their checking account into the ether with no protection?
I'll say this for myself, absolutely not.
Yeah.
Because the thing is that once it's gone, it's gone.
You're not getting it back.
And that's what I told my consumers. I've had consumers go like, oh, I could just send the wire on the phone. I'm like, listen, you don't want that liability on you. Sorry, Adam, but I tell them, put on the title agent.
Yep.
Because they're the professionals. I said, if you mess up anything or anything happens, you lose that money, that's all on you. I said, mitigate liability. Don't do things only out of ease. Sometimes the easiest way is the most costly way.
Yep.
So take the extra step, go to the bank, protect what's yours.
Yep.
Because $50,000 is $50,000.
Yeah.
And some people spend 10 years saving that.
Yep.
And you're telling me that you're willing to risk it because you don't want to get off the couch? Get off the couch, go to the bank, man. Come on.
And but I start wondering maybe if the financial industry needs to push that change a little bit. There must not be enough losses right now for that to happen, because anytime there's something bad, it has to happen so much that people decide it can't happen anymore. But I can tell you, fraud in Florida specifically is just absolutely off the charts.
Yes.
So, and in tandem with fraud being off the charts, we've now seen that business has went down.
Right.
And so we're eager to take new deals in. We're eager to help people with buying and selling, and that we want to make sure that doesn't cloud our judgment to where we start getting lulled into a false sense of security into doing a deal for vacant land, seller lives in Brazil, like all these different nasty things coming up. But given that business is down, and Nate, I'll tell you right away, I did 150-ish transactions last year. I'm on track to be about 20% below that. And just giving you real talk about the industry right now, the business is down.
Right.
And I pulled some stats today that I wanted to share with you and just kind of get a feeling from you on, Southwest Florida in itself has a lot of different pockets within it. And so it's not fair to look at Southwest Florida as a whole.
Right.
It's just not.
Right.
I live in Lehigh Acres, so for me, that's the one I follow the most. And I know a lot of people are watching Cape Coral, and there's so much bad publicity about Cape Coral right now. And I don't think it's all justified.
Right.
But here's what I found is that let's go back to July of 2021. And in July of 2021, there were 19 properties available to rent in Lehigh Acres. 19. That's it, man.
Oh, my God.
All right.
Okay.
In May of 2021, there were just 777 homes available to buy.
Jeez. Remember that time.
So those sounds like, okay. So that gives you baseline. I just gave you the lowest in the last 4 years. Now let's go fast forward today. Today in Lehigh Acres, there's 467 rental properties available. Mm-hmm. Okay. In Lehigh Acres, there are now 2,065 homes available to purchase. So 3 times the amount. And the rental market is out of control. There's a ton of rentals out in Lehigh Acres. So just to back those numbers up, though, So we've got, there's 467 homes for rent available in Lehigh right now, and the average is $1,980 in rent. The average sale or property offered for sale in Lehigh Acres right now is $330,000. So it just did a quick, 96.5% loan at 6.75% over 30 years, and that's going to give you principal and interest of $2,062 a month. So the P&I is about $50 to $75 above today's rent.
Right.
And we know nothing's free.
And that's not including escrows.
And that's where I was going to go, because you got property tax, you've got homeowners insurance, and on this, you're going to have mortgage insurance. So let's say an all in on that. I don't know, Nate, what would you say? Maybe 2,650, 2,700 for a.
Yeah, 25, 26.
Yeah.
And the only reason, and I really do call Lehigh the last safe place for consumers, is because it's not a city. So therefore, the property taxes are a lot lower.
Yeah.
Because I see some diabolical numbers out of like Clewiston, LaBelle, Fort Myers, Cape Coral, Punta Gorda, and Lehigh is like the last safe haven because it's almost quite literally in half. And also you got insurance. So, but I guess we'll see. I guess we'll see. But
gotta love that. Gotta love that elevation out in Lehigh. Highest elevation in Lee County, and I think I'm at 22 feet.
Yeah, there you go.
So I feel real good with that. But they've been fighting that becoming a city, and they know what they would get, they would give far more. And that's why I think people are saying they don't want to do it. And it's a split. I mean, it's pretty much a split right now.
I honestly see it as an eventuality, because if you look at the population sizes between Cape Coral and Lehigh, they're not that far apart.
Yeah.
But the infrastructure is lacking in Lehigh.
Yeah.
For the amount of population, and not only that, if you take a fly at RSW, and you take off to the east, and you make that bank turn to go north, there's a lot of land still undeveloped. So there's a lot more to go versus Cape Coral. You fly over Cape Coral, a lot of it's developed.
Yeah.
So with Lehigh, there's so much to go. And I'd say if Lehigh wants to get to the point where it's going, because since affordability is so high, there a lot of builders are building out there. I'm building out there. Nice. It's going to be a situation where they need the infrastructure. They need the infrastructure.
And so if you built a new home in Lehigh Acres today, for the most part, you're going to be building on septic and well.
Yeah.
And Cape Coral, what they've done, which is, to the chagrin of many, is that they've started the expansion project where now they're eliminating the septic tanks, and I know that people don't want to do it, but I got to tell you, I'm a longtime fisherman, kayaker. I love the waterways here in Southwest Florida. There's so much fecal matter in the water. I don't even like getting into it now with an open cut. You know what I mean? So I think we need to get away from septic tanks. I think that we're a big enough society that we can start getting sewers. But I got to tell you, it wreaks havoc on people's finances and on their tax bills. Because in the Cape, I mean, the assessments are just crazy right now, man.
But it's one of those situations, man. Number one, people hate change. Doesn't matter what it is. People hate it.
Yeah.
And two, it's growing pains.
Yeah.
Cape Coral very quickly is going to be like the new Bonita. The money that's going in there right now is insane.
Mm-hmm.
And if you think about 25-year planning, they need to do this now. Because they would fall under the Lehigh situation where they didn't do it and now they're behind.
Yeah. They outgrew it.
If you compare Lehigh from 2020 to 2024 or 2025, two completely different towns.
Yeah.
And when it comes to just development and the population and everything like that. So I see it as, yes, it's painful, but it needs to happen for the betterment of the city for the future.
You said that you're building out there. Are you building like your personal home, or you're building investment properties out there?
We're building investment properties for sale.
What side of the Cape do you guys like?
Ooh, I live by Burnt Store. So that's like, like the Seven Islands project?
Yep.
I live right by there.
I love that area.
Oh, man. Matt Lachey's right there.
That's,
the mangroves.
for me, drop a kayak in right there and be fish. I'm a fisherman, so I love that.
I love the water too.
Yeah.
Beyond aviation, I love the water.
Well, you get to see it from a different vantage point when you're up in the plane.
100%.
Yeah.
100%.
Yeah.
No, we really do live in a beautiful, beautiful place, man.
Yeah.
And the opportunity to live here, I'd say, is a blessing every day, because my office is in Fort Myers, and I get up at 4:30, go to the gym at 5:30, get myself ready, bump. But the fact that I get to drive over a bridge, and what you see it's awesome, man. It's awesome. I love it.
So, but you drive quite a bit through Cape Coral to get into your office there, because if you're out by Burnt Store, I mean, you probably
13 miles. Yeah, right around there.
Gosh, it seems like it's longer, but I guess, you know.
No, it's just how the roads
wind.
were.
Yeah. Well, I like the Cape a lot. I think that the Cape has its own challenges, but, you know, I flipped a house out there in the yacht club area. And so when I was out there, and I made the mistake of living in it while I flipped it, which is a bad idea. I'd never do it again. But when I lived down there, I lived in the yacht club area. I really like that 47th Street, or is it 47th Terrace, where you got, you know, the deck, you've got Nevermind.
Oh, Terrace.
Terrace, yeah. You got all
cigar
the
bars there.
Yeah, everything down there. I really like that spot. And then there's a wing spot. I told you I like wings. There's a place called, I believe it's Overtime. And it's going to be off of Cape Coral Parkway down on the south.
All at the end.
Way down.
I love Overtime.
Love that place, man. Good TVs, good wings,
the
good
food
beer.
is solid no matter what. It's great stuff, man.
Okay, well, next time I'm out there, I'm going to call you there because I love wings out there for sure. And then next time you're out this way, I'll take you to Wicked Wings too because they're cool. They're really cool people. So Lehigh and Cape Coral are almost, you know, sisters in a way because they are kind of like, when I grew up in Bonita Springs, and for me, it was always kind of like, if you ran out of money and couldn't afford Bonita and Estero, and you probably couldn't afford Naples, then you could go east or west.
Yeah.
And for a long time, people were like, I'm not going east. I'm going west. I'm going to the Cape.
Right.
And then, you know, Lehigh became a lot more attractive just for prices. But I'd like to say, going back to the septic tank elimination project and the water expansion, is that I don't know of anybody in Cape Coral whose water stopped when it got dry. And I know a lot of people in Lehigh whose wells were dry and they weren't able to do their laundry.
Right.
So we need those utilities.
Yes, 100%.
You know? So but nobody wants to pay. And I was having a chat with a real estate agent the other day when we were talking about the new condo laws that came out that are allowing HOAs to basically kick the can down the road.
Right.
And they go, wow, what a great win for everybody. And it's like, no, because, you know, it has to have another huge disaster for us to really get back on track to saving the money and doing that. So, but I love Lehigh Acres. I mentioned my business is down this year about 20%. A lot of the residential improved real estate that I did, so not vacant lots, but a lot of the residential improved real estate that I did last year was this avatar: non-U.S. citizen, FHA buyer, down payment assistance program for new construction. Now,
that's gone.
I love that product, by the way. And I don't speak fluent Spanish, but I have translation services, and I was kind of working on becoming that guy, right? That market's been decimated. And the FHA said, we're not going to do that anymore. I have a problem with it because unless you can show me that non-U.S. citizens who were taking these loans were paying, you know, slower than U.S. citizen, I have a real problem with it. I think it's a poor investment decision to not allow that investment. So I know that it's impacted me and my family a lot this year, but how about you as a lender?
Listen, as a Dominican, Hispanic lender.
Right, here I am talking. I'm on the soapbox and you're like, move, let me up on there real quick.
Listen, look, man, I'm just going to be honest. What happened there is crazy because this is the way I personally see it. Let's set politics aside. Number one, these people are legal. Number two, typically FHA requires or lenders require that they have past renewals to show chances that they're going to get renewed again. So these people have good standing already.
Oh, as far as for their green card.
So they have good standing. I think that, I honestly, like, unbiased, I just think that you're just robbing people of opportunities that have worked so hard. And the main reason why they came here in the first place was to make that dream a reality. So number one, there's a vetting process where lenders already require that they have past renewals. So automatically, you know, they're probably in good standing with the government. Yeah. They have to comply with all the actual financial obligations as a U.S. citizen or permanent resident. Nothing changes there. Yep. They get no benefit.
Got to be filing tax returns.
You got to pay taxes. So what gives?
Yeah. So, now, I know you say take politics out. It's hard to really separate politics because you can't see anything other than making a statement. I really have a problem with it. I'm a taxpayer and myself, and I feel like this might not be the right way to look at it, but I feel like that avatar that I told you about last year that I served so well, that one, they paid on time. Number two, they were actually using the investment for the purposes intended, occupying it as a primary home, but with the intent that they were going to then move up.
Yes.
And so they would satisfy that debt and then go back and borrow again. And every time they did that, it gave the state of Florida doc stamps. It gave, a title insurance title guy a chance to write a policy. It gave a lender an opportunity to earn their living. And I just really have a problem with making a change like that when it has such a profound
there's
impact
no
on our market.
tangible benefit.
No, I can't see any.
I don't see it.
Yeah.
And listen, like I wouldn't say it's just, I think it's poor. You know what? It's poor policy in my opinion. And you know what? It's a situation where the United States, every 4 years we have an election. It's going to be a pendulum swing.
Sure.
It always is like that.
Yep.
So it's one of those situations where take it on the chin. This is why we get paid the big bucks.
Yeah.
We got to figure out a way to get them in conventional, to get them somewhere else, because I'm not going to change anything.
You have anything that you can use, Nate, as far as like do they do a 97% conventional?
They do.
But they want them to be a U.S. citizen. And they want to see
when you conventional
is
fine. With conventional, you don't have to be. You can use. You can be a non-permanent U.S. person. It's just that conventional is a lot stricter when it comes to your FICO score, your debt to income, where FHA could be a little bit more laxed.
Yeah, you intentionally took the product, the vehicle that these people were using,
right,
and you took it away from them. And you said, well, you can have the conventional, but damn well they don't qualify for the conventional.
Exactly.
So
and then you have other programs, which is these are called non-QM, which are not really subsidized by Fannie Mae, Freddie Mac, and HUD, but the down payments are minimum 10%.
Yeah.
So there's only one avenue, and that's a pretty meh avenue.
Yeah.
So it's one like, so what I do with them is I just tell them, I said, hey, let's structure it like this. Let's work let's get your FICO score up. Let's do this. Let's do that. Because I try to find solutions. But I will say this: it really has hurt morale when it comes to people looking to buy.
They don't even get far enough because they've heard online.
No, I've heard people just don't buy. I've had situations where the consumer will say, I don't know what's going to happen to me. They're legal here. They have the work permit. Mm-hmm. They're like, I don't know what's going to happen to me. I'm not going to buy. I've had 4 or 5 people do that. And I'm like, shit, this is for real.
Yeah.
So it is what it is. We got to keep moving forward. If there's any policy change in the future, it will come when it comes, but it's the reality that we're living right now.
Yeah, and the other thing that I'm seeing is the Canadian buyer who's saying, I'm not coming down.
Yeah.
And that was, again, we'll go back to policy on that. We've got RSW here in town. It's one of the largest international airports. It's bringing people in, and those numbers are down. And those numbers bring in people that rent hotel rooms, that go to baseball games, that visit our beaches, that go to Wicked Wings too. I don't know why I'm plugging them so much on this episode, but hopefully I'll get an extra ranch when I go in or something, maybe an extra beer. But, those people are all, when they come here, they do more than just shop for homes and buy title insurance policies. And I think that if I'm feeling it in my business, and I think I do a pretty darn good job, and you're feeling it in your business, and I know you're one of the best in the business, then we definitely have something that we're dealing with here. And that brings me to my next ramble, which is, I follow a guy on Instagram, and I'm not going to say his name on here because I don't know it off the top of my head, but I follow a guy on Instagram, and he's talking today about a new term, infopreneur. And an infopreneur is someone who says, I used to just sell real estate. I used to just open doors for people or whatever, and now I'm an infopreneur. I'm going to use the experience that I've gained throughout my process, and I'm going to be able to share insight with people. You say, well, I'm Nate, I'm a mortgage broker, but I've sat at the closing table enough times that I really do know a little bit about title at this point. I really do know a little bit about appraisals. I really do know a little bit about homeowners insurance, and maybe I want to talk about that. Maybe I want to share that with others. And so, is that the way forward when the business is down? Is it finding different ways to do it? Or is it waiting for your competition to fall off first? Or is it to just work harder? Like, what is the way forward? If our business is down, do we just work 20% harder for net zero? Do we have to start? I know you're doing things. I won't steal your thunder. I know you're doing things with agents and with referral partners where you're trying to change the way that you do business. But how do we get over that 20% drop?
Well, number one is, this is the moment where you see who's who in every single way possible. This is where things get tough, the masks come off. Mm-hmm. And for the past 4 years, and prior to that, slowly but surely, people have been falling off like flies. What I think is, I've seen what you're talking about, people that are talking regarding subjects like appraisals and things like that. Stay in your lane.
No, I love it because I knew you were going to go one way or the other.
Stay in your lane. Because number one, you might do it out of good faith, but that's not your forte. For example, madam, you suck at being a lender, but I suck at being a title agent.
Yeah.
I'm the expert at my thing. So let's complement each other.
Yeah.
So, for example, instead of somebody just saying something, how about you collaborate?
Yeah.
Because, for example, Adam, let's do it like this. Let's just say that I made a video talking about title, which I know nothing about. I've been doing this for how many years? Because it's not my role.
Yeah.
Instead of me doing my own research and just talking out of, I could get my crowd, get your crowd, collaborate,
Yeah.
and now we have both crowds viewing our content. But
a connector.
So, and I believe that if you delegate, listen, this is where a good team is important. If you have a good team of inspectors, appraisers, title agents, you guys can band together and you guys can lift each other up. So number one, stay in your lane. So don't be doing that. Two, when it comes to business, what I've been doing, and I've actually taken advantage of the slowdown, and I'm going back into the weeds of my business and restructuring everything. I had a couple realtors give me a call, and they're like, hey, how are you? I'm like, I'm doing fantastic. And they're like, where you been? I always pick up the phone, but I'm not out there. I said, I'm working on some stuff. I said, I'm working on some stuff.
Yeah.
Because the thing is that right now, it sucks, but it's like, no, glass half full. Let me go back when I have the chance. Let me build the platforms. Let me, the tech stack. Let me review everything.
Yep.
And then, so that whenever I'm ready to pop out, I'll pop out the way I have to pop out.
Yeah.
Right.
Yeah.
And when it comes to, and not only that, you start in these moments too. What I personally have done is I've questioned everything. I turned every stone, and I'm like, what is the excess fat that I have? And it's not even cost, time, energy, relationships that no longer serve me. Because at the end of the day, for you to serve your business the best, for you to serve your consumers the best, and for you to serve your partners the best, you got to serve yourself first. And it's one of those situations where what I've learned in personal and in business, I had a lot of bloat. I was giving resources, time, and attention to individuals that weren't deserving of it. And that's just in life in general, where with these slowdowns, take it as a point of reflection and see where you're at. Because whenever you're ready to boom again, you got to make sure that you're slim and you're surrounded by the resources and the people that you need to dominate.
Yeah.
And that's something that I've done, which I reevaluated everything. I sat down and I said, what's not serving me anymore? And that's been a big thing for the past year and a half of my life, where I pretty much went through an entire thing of reevaluating who I was, reevaluating what I wanted, and therefore I translate into the business. Because if your household is not in order, and it doesn't have to be the physical house, if you're not in order and you don't know what you want, you don't know what you're trying to look for in life, or you're not good with yourself, you're not good with your spouse, that's going to leak into the business.
Absolutely.
So we can dive deeper into that.
And if your business isn't right, it's going to leak into
back.
home. Got to have it right at one, and you really want to have it right at both.
Yeah. And
I always say I got to have it right at one, because if I don't have it right at one, I got nowhere to run.
Exactly.
Yeah.
Exactly. So I would say personally, when it comes to what I've realized in this business, and this is a message to everybody, take care of yourself. Seriously. This business is not easy. This business will eat you alive. This business can kill you. So what I've been doing personally is just working on myself regarding who do I want to be tomorrow? What commitments am I doing today that's going to honor my tomorrow? And by you focusing on yourself in that way, regarding it's your physical health, your mental health, your spiritual health, that will automatically improve your chances by itself to increase your business. It's not always about the numbers. It's more often about the human being behind everything. Yeah. And what I've learned is there's a point in time that I just cared about the numbers. I forgot about Nate. And then now there's some situations happened where I fell and I came through. It's like, no, Nate's got to come first. So anybody in this business, whether it's title, mortgage, and real estate, real talk, always prioritize yourself. always make sure that yourself, make sure that you work on your emotional intelligence, because your emotional intelligence will dictate a lot of how you act within your family, your business, your friends. Everything is connected. Our lives are just giant webs interconnected.
Yeah.
And if the core doesn't have its integrity, everything else collapses. And that's the one thing that I've been trying to talk to people about, because of my journey, is focus on yourself. Do right by yourself always. If you're right by yourself, everything else follows through. And yeah, and it's one of those situations where if things are not going right, it's a journey. Take it one step at a time. It's not the end of the world. Because this business is very high stress. And at the end of the day, yes, it's important to get it done, but don't kill yourself over it. You're not performing surgery where somebody's life is on the line. Don't put your health in jeopardy over fictitious numbers. Always make sure that you're okay, because I'm telling you, this is a beautiful industry. I love it. I love the people in it. But if you become obsessed and you let go of yourself, there's only one way down. And that's the one thing I want to hone into a lot of people, because I've seen a lot of people, they're sobering up regarding the party's over when it comes to the closing. And now they're slower, and now they're like, beyond all that, what do I have left? And they really haven't done anything. They've ignored their personal lives. They've ignored all these things. And I think there should be a balance of, hey, whether you're closing a lot or not, always make sure you're good with yourself. And that's something that I've been working on.
And I think it's fair to even say, there's times where, that's a really authentic take, by the way, but there's times to say, I'm better served to go hang my suit up on the hanger and play with my daughter.
Yeah.
Because this is not serving me. I'm not getting anywhere with this. You did an interview with UWM Live, and one of the things I really liked about it, I wanted to get the quote and I didn't, but the quote was essentially that it was talking about how you source your realtor relationships, and that realtors love to tell you, like, give me some leads. If you give me some leads, I'd love to work with you, right? Yeah. And you said, you didn't use the term resource welfare, but that was kind of the note that I had made, where you said, I don't want to do that because then they need me. And an ideal partner is one that can stand on their own 2 feet, that 100%. Knows how to generate their share of the business, can bring it in so that I can do what I do really well. I thought that was really great, because sometimes maybe, man, the best advice that you could give someone is hang it up for the day. Go home and play with your kids and just try again tomorrow, man. Because especially in the real estate game, I see these realtors and they literally will spend their entire day just stressing out over a deal they don't have.
Right.
And it's like, okay, well, there's a time and place for that.
Right.
But, I thought that it was interesting that you said maybe the best advice that I could give a real estate professional, instead of here's a number of someone that may want to sell, take a walk.
Yeah.
Yeah, bro, let's go shoot hoops.
Yeah.
Like, let's, we got to live the good life.
Here's the thing. And this is what I tell realtors all the time specifically. I said, guys, we got into this industry for financial freedom, not slavery.
Right.
But the thing is that there's a fine line, because this business, when it comes to those checks, it turns into crack cocaine pretty quickly when you start seeing those numbers. Yeah. And then you become the slave. You start running in that mouse wheel. And then whenever you crash and burn, because everybody does, that's when you have to sit with yourself. Yeah. And what I'm trying to tell people is like, hey, you don't have to do that. There's a way to do it more balanced. You can live a very fulfilling life in this industry and also not kill yourself. And because at the end of the day, I tell people, why did we get into this? Because we wanted financial freedom. Yeah. And I said, are we free? A lot of us are not. Now we're enslaved to the numbers. And then, which is crazy, because the same thing that we were looking for, which was quality of life and longevity, is the same thing that will take us to our early grave. Yeah. The same thing. Yeah. And that's when I talk to agents and stuff like that, whenever business is down for them, I said, bro, take it as a blessing. Of course, you want to do more, but let's be human. Mm. You have a daughter? Yeah. You got money? Yeah. Go on a cruise. I said, once you die, your kids are not going to think about how much money dad had, or, oh my God, man, I remember, like, you're 85 years old and your deathbed, man, I remember when I was 27 years old, I had 100 racks. Like, no, you're not thinking about that. So take the good with the bad. Like, for example, like myself, like, I'm slow right now. Like, I'm slower than I want to be. I'm like, okay, good. I'm going to start building my systems. I'm going to dedicate more time to build myself up as a professional, as a human being. So whenever opportunities come to me, I'm ready to grab it versus just beating yourself up. Oh, it's like, no, sit back, look around you. It's not all about the blinders. Sit back, look around, see where you're at. Because if you look around, you might find a path that you've never would have recognized in the first place. And then it might be the easier path or the better path.
Yeah.
So when it comes to those realtors, going back to that point that you were saying, is and that's one big thing that I was looking at, is a lot of real estate people don't want to put in the work in. They want things to be automatic. I'm not saying the majority, but there's a lot of, and that's the excess fat that I was telling you about, which is I don't want a lot of partners, but I want Navy SEALs. I want the best of the best. I want people that knows how to do deals, that will take care of me, I'll take care of them. Quality over quantity. The same thing I said at UWM Live. And once I started de-bloating and I started realizing who's of value to me, how I can be of value to them, stress went down. My process is a lot better because you're not having all these things just hanging around in the air that's going to be, hurting your business. So point is, take your time, reevaluate yourself, reevaluate your business. Right now is the time to do that because I'm telling you, I see a boom coming one way or another, whether it's a refi boom, a purchase boom, whatever. I see it coming.
I think it's kind of nice, though, because with this little bit of a pause or slowdown, whatever you want to call what this has been so far this year, I think it's actually opened up our eyes a lot on the partners that we're working with. And we're seeing, I'm going to be very honest. I work with a lot of real estate agents. I work with some that I do their first deal. I work with some that do a ton of business. Yeah. And the majority of real estate agents, regardless of the production level that they hit, don't have enough gas money to get to the next closing. Right. That's the fact. They're leveraged hard. And so if you're a real estate agent and you're listening to this podcast and you're hearing us today, let me just say this. It's completely normal to be slow right now. It is completely normal to be lean financially while you're getting through deals. And it is completely normal for me anyways, as a title insurance agent, to see commission advances come across my desk all the time. Right. Where realtors need that commission even before they close.
And I'm going to add something else. Are we allowed to cuss?
You want to?
All right. All right, guys, I'm telling you this right now. Once you get into this business, you'll see a lot of shiny stuff. All right.
Oh, I beeped you on your shiny.
Yeah. A lot. When I go like this,
okay,
you know.
Get ready.
All right. There's a lot of shiny stuff. Most of it is. I'm telling you, there's a lot of shiny stuff that looks shiny and that will distract you. Yeah. There's a lot of things that will not that doesn't really exist. That's why realtors or mortgage professionals, title agents, they as soon as they get their big check, they gotta get the watch, get the car because it's a front.
Yeah.
Don't do it. Stick to the grind, stick to the discipline. That will take you far because the same people that did that in 2022, the people that were dog walkers that became realtors and bought the Lexus, they're back at Ross. Yeah. So it's one of those situations.
That's right.
So be careful. This is a marathon, not a race.
Yeah. This is where a lot of the real estate agents, mortgage lenders, and title agents are going to be very, very vulnerable because when it slows down, there's always going to be someone there in your ear telling you if you had this app, it would make your life different. And it's only $20. You just click the button on your phone here and we'll bill you once a month. And you could find yourself as a real estate agent with 10 to 12 different app subscriptions.
That you forgot about.
Yep. Yeah. And it's not going to replace hard work and prospecting. And the hardest thing to do is to pick up the telephone and ask somebody for their business and to be willing to be told no. And that is what realtors don't want to do, and that's what title agents don't want to do, and that's what loan officers don't want to do. It's the meat, though. It's where you actually get what you need to survive. It's where you actually get commitment and buy-in.
Right.
So, I would say if you're a real estate agent and you're listening to this podcast, thank you for that, and be sure to subscribe. But also, like I said, you are in a completely normal situation, and whether or not your friends at the Bear event will tell you this, they're hurting too. And the numbers don't lie. Everyone is down a little bit. But I would say that who you hire matters. How you handle your business is critical, and you're going to have to hustle for the deal today. It's undeniable. You don't spend a lot of time, Nate, running around to open houses. I read something that said you don't really like to do that.
No.
Uh-huh.
No.
Tell me, what do you like to do? I know you've got a big event coming up, and I want to spill on that a little bit, but tell me what you like to do.
The way that I see it is time is money. And it's more like, how can I effectively use my time to help my partners grow? But also spend money wisely. Because in this business, we all know, if you don't really sit back and kind of see where the money goes, you'll leak everywhere. Open house here, event here, $30 here, $70 here. That turns into hundreds or thousands of dollars a month.
Yep.
So I'm like, okay, open houses, people are not going to them. They're not going. I've done a bunch. I remember when I first started doing open houses on behalf of my father back in 2018, 2019, there'd be lines. I'm not seeing that anymore. People are just not going.
Yeah.
And then so I'm like, well, it's just going to be me and a realtor just sitting there on our phones. I bought cookies at Publix and sandwiches. They're going to go bad.
Yep.
And we're not doing any with it.
Yeah.
So I'm like, okay, let's redefine this.
Yeah. They feel like they have to be there because the seller expects it.
Yeah. And it's
so
like,
misery loves company, and Nate, come on in. But you're like, this doesn't work.
But there's a way to make it work, though. You could make the time productive by making content. So what I've been running is content open houses, where you grab a title agent, 5 realtors from 5 different brokerages, the same brokerage, and what you do is you do an open house. But here's the thing: if a consumer doesn't come, it doesn't matter, because there's instant exposure. Because let's just say, for example, Adam, you're the title agent, I'm the lender, and there's 5 realtors from 5 different brokerages. There's no client that came in, but let's just say that each one of those realtors did a live, or let's just say each one of those realtors made a video, and let's just say that each one of those realtors had 1,000 followers. You got exposed to 5,000 people. That is the most productive open house that you've had.
Yep.
So that's what I've been focusing on: is together we're stronger.
Yeah.
A rising tide lifts all boats. So if we all band together and we all help each other out, we can make money. There's enough food out there for everyone. And that's something that I've noticed recently, especially, and I have to give a shout out to the Cuban realtor community, that there's something that I do admire. They're very open to help each other out. There's a lot of realtors that I've seen that are in different brokerages, but they don't care. They will help each other out. There's that camaraderie in that community is, I would say, it's beautiful, because I don't see it anywhere else. And that's why I see that specific demographic of realtors, that's why they're propelling,
and they're killing it.
They're killing it. There's realtors that I know that have been in the industry for 2 years that are already making 6 figures, because they all kind of collectively we go forward versus everybody just doing it individually. So I got that inspiration from them, that community, and I know this could be applied everywhere else. Together we're stronger. Together we're better. And rising tide lifts all boats.
Now, how do you feel when you could walk into one of those and there's another lender there, though? You play nice?
I just be like, all right. Well, I mean, we can't share a client.
We can't split a deal.
We can't split a deal. But it's like, nice to see you. But like, it's just pretty much So.
Well, that's I like to go to broker opens, and I like to go to a broker open because now you've got basically what you just described, is turning an open house into a broker open, where you've got actual people that are talking to potential clients. And I love to go to open houses, but it's really for the purpose of having just a quick moment with that real estate professional to try to build rapport and to remind them I'm one of 400 and something title agents in the area. I'd really like to work with you. And I know your brother's a title agent. I deal with a lot. I sold real estate before I did title. And I thought there was a ton of realtors in Florida, but there's a ton of title agents too. And they'll come out of the woodwork. Like you don't even know it. And you tell somebody that you're a realtor and they're like, oh my God, my wife's a title agent. You didn't know that? You've known her for 20 years.
But here's the thing. And this is where I say about this aspect. I'm glad you brought it up. Just because you have a license doesn't mean you're a realtor or a lender or a title agent. Because the barrier, I'm not sure for title, I can't speak on that, but the barrier to entry for my industry and the real estate industry is stupid low.
Yeah.
It's cheaper.
It used to be even lower for mortgage.
Oh my God, no! You just be like, you have a pulse. All right, you're good. Yeah. Right, but no, it's a lot more difficult, but still very low. It's just it's a 20-hour course, and then just make sure you didn't do crime and you're good.
Yep.
So there's a lot of people that have the license, but what makes you a mortgage professional, what makes you a real estate professional is you dedicate your entire life to the craft when it comes to, this is not a side hustle.
Yeah.
This is, I would say it's an art.
Yeah.
Like it's something that you dedicate 100% to, because there's, I don't know how many registered realtors are out there, but I'll tell you probably 0.1% are making six figures.
Oh, yeah. Oh, man. I think there's 12,000 realtors just down in this area, and the average realtor sells less than 2 a year.
There you go. And those 2 that they sell is because of a friend or an aunt.
Yep.
So they didn't get those
and
leads
they
naturally.
did a crash and burn terrible job on those 2 deals because they don't do it enough to know we do best what we do most. Most of the time, you absolutely hit the nail on the head. That having the license is a start,
Right.
but it's not
It
everything.
doesn't define you.
There's people I have competition that work unlicensed, and I always try to talk about it a little bit. That if there's a license available, I want you to have it. If I need
Right.
your service and there's a license available, I'm asking why you don't have it.
Right.
It costs too much, or you couldn't pass the test because in title, it's a 2-week class. You go and take a test at Pearson View,
Yeah.
and
Proctor.
you're licensed, dude.
Right.
And yeah, your underwriter checks your credit, make sure that you're not a felon, but really it's
not that bad.
To deal with the largest financial transaction that most people will ever.
Very low barrier to entry.
Yeah, man.
Yeah, like literally, I'd say for you to do insurance is more difficult, or for you to be an active stock trader for holding accounts, it's more difficult, to get the licensure and stuff like that. So it's one of those situations where if you feel deterred to get your license because there's a lot of realtors, always remember the license does not define the person.
Yeah,
it's the work.
And then that's what did you call it? That's just to get to the table.
It's just get to the table, and it's a big table. Like I said, it's a very low barrier to entry. Do not feel deterred. The title does not define you. Anybody can hang their license at a Remax. Anybody can get a business card. Everybody can be just take a headshot.
Yep.
It's not about that. It's about the grind and the hustle. And if you guys want to get the license, I have good news for you. There's a lot of them that are slacking off. So take the opportunity.
Yeah.
Take the opportunity.
Now, do you ever mentor? Do you ever bring any juniors in, or do you work with them? Are you developing any talent with your firm, or are you just pretty much right now just focused on what you're doing in the expansion?
Right now, I'm looking to recruit, but I want to recruit more experienced people.
Mm-hmm.
So then I could be more hands off. So then when I can be more hands off, I can get the juniors in.
Yeah.
Because juniors tend to be a little bit more needy when it comes to help.
They can get you in trouble too.
Right. So what I need to do is just start with older or more experienced, and then once everything's flowing there, I'll be able to get the juniors.
Yeah. Yeah. Okay. Well, we've covered a lot, and I know that it's going well because I haven't talked a lot about what I do. So let me take a quick break just to let you know. My name is Adam, and I do title. You're in the house with Title Adam. We got Nate Perez here today, and we're having a really great chat. If you're buying, selling, building, refinancing, or doing any kind of a deal in the state of Florida, tag me in as your title agent. I'll get you to the closing table faster and with less stress. I have a feeling after today's chat, I'm actually going to be doing my job a little bit better. I wanted to jump over because I've just been dying to talk about the airplane.
Okay.
All right. So you're going to have to start. You're going to have to take it back and tell me, how did you even get to this spot?
All right.
And I want all the scoop.
All right. Aviation. Ever since I was a little kid. I don't know why. But okay.
When did you fly? When was your first flight?
Well, let's go back way back.
Okay,
Let's go way back. I'm gonna give you the
give me
precursor. I've always loved aviation ever since I was a little kid. I would always be that kid that would go into the cockpits, talk to the pilots and things like that. I would have toy airplanes. I would make sure, for example, every time I go to a TJ Maxx, I would go to, there used to be a store called Daffy's up north, and they'd have toy airplanes, and I had a whole collection. I would build airports on the floor, and I just loved aviation, and I wanted to be an airline pilot when I grew up. And my dad asked me a question that changed my life forever. And he says, "You want to learn how to fly, right?" I was like 10.
Mm-hmm.
And I'm like, "Yeah, I want to be an airline pilot." And he says, "Do you want to be an employee, or do you want to own your plane?" I said, I didn't understand. I said, "There's a difference." He's like, "Son, there's a difference between waking up at 4 a.m. because you have to, and reporting to something that you might not want to do that day, and you might be away from your family, versus you building your life to have your plane when you fly whenever you want." I don't know what happened with that 10-year-old brain of mine, but that changed everything. And And then I just was always having aviation. I was in Civil Air Patrol, flight simulation,
Oh, cool.
all these things.
Now, do you remember if that conversation happened up north, or were you
No, it was down here.
So
It was
you
down
come down here, dad's in the business.
I'd say it's 14, 15. I was a little older. It was 14, 15. I think I was like on the verge of getting to high school or in high school. And yeah, and then
you lived in the Cape?
I'm sorry?
You lived in the Cape as a kid?
So I've been living in the Cape since '06.
Okay.
I went to Paragon Flight School. Shout out to Paragon, best flight school. And I flew for a little bit. But the thing is that I wasn't quite ready. Like I was very focused on school and things like that. And then I paused on that real quick, got into a relationship, and just started focusing on my mortgage stuff, the construction stuff. And there's something that happened that I just said, hit the button.
I got it that time.
So, and I said, you know what, I'm just going to do it because I said, I'm not getting any younger. And, and this is my passion and I have the income to do it. And I'm just going to do it. And I started, but here's the thing is that I've had to take hiatuses because as business becomes more busy, I like don't have the time to study or I don't have the time to fly. And let's just say, for example, like on Saturday, I'm supposed to fly, but I have a broker's open, I have an open house and things like that because I got to fuel the machine that fuels my hobby.
Yeah.
So that's one of the situations right now. I have a couple hours left, but I said I had to go into another hiatus because as I've been doubling down on certain things, I've had to occupy more time to those things. And that's the beauty of it because people are like, man, you're taking a long time. I'm like, it's the journey, bro. Like I'm doing what I love and I'm not doing it because I'm trying to get to a career.
Yeah, you're not taking off for Delta next week.
Exactly. So what my dream is be like, Adam, have you had key lime pie in Key West? You're like, no. All right, tomorrow. Let's go.
Now that's
45-minute flight. We land. We get out the plane.
Kermit's, right? Is that who it is in Key West? Is it Kermit? Kermit's that does the key lime pie, I thought?
I believe so.
Yeah.
Or let's just say there's a restaurant called the Conch Republic. Oh, my God. The food service is fabulous.
Fly right in.
Just fly right in, 45-minute flight. And then we eat some lunch. And then we come back.
And the flight itself has got to be just awesome.
Oh, my God, man. Like when I'm like, so I've done a couple flights to Sarasota and like St. Pete. And like Sarasota, like driving from Fort Myers, like an hour 10?
Yeah.
30 minutes. And you're just coasting. I don't know how to describe the feeling. It's from whenever I fly a plane, it's the most natural thing for me. I am at my calmest. I'm at my most bliss. Even my instructors have complimented me. They're like, when I first started, like the control that you have on the airplane is remarkable. And it's because I love it so much that I'm just naturally good at it because I'm passionate about it. And the thing is that not hard, but not easy, but using all your limbs because you got the yoke, which is the steering wheel thing. Yeah. And then you got the throttle and the mixture, but also you got your feet for the pedals when it comes to the rudder and the brakes. So you're using all your limbs. Yeah. So there's a lot of things to keep in mind. Yeah. But for me, it's like second nature. It's that I just
locked in,
man. I love it.
Now it's one of those things where I feel like, when you were just describing that, I think of like a drummer. And like anytime I've ever jumped on a drum set and thought I was just going to bang something out, nothing sounded right. I couldn't get my foot to do the right thing at the right time. But I think that is something that has to show something about your actual fiber, Nate, because that is a high stress situation. Even if you love it, man. I mean, you got an instructor there. It's a high stress. So that's got to talk a little bit about just who you are. Are you a poker player?
No, but I'm really good under pressure.
Okay. So I was going to say, you clearly are able to do that. Now, have you flown into Venice? Have you flown into Venice Airport?
No, and I'll tell you why, is my instructors say don't fly there.
Because it's such a weird thing. If you go to Venice Beach, you'll see them flying in right over the beach. It's like they're going to hit you almost as they're coming in.
No, that's exactly why. Because
harder landing,
no, it's an uncontrolled airfield, and half of those people are flying like 80 years old, and like and sometimes they don't make the radio calls that they have to.
Oh God,
and
that's scary.
Oh yeah, so they're like, hey, you see that place? Yeah, that's beautiful. Don't go there. I'm like, all right, cool.
Okay, cool. So, Siesta Key, Sarasota.
Yeah, exactly. But that's the main reason why.
Yeah,
because. There people do land without even because whenever it's an uncontrolled airfield, you have to report what you're doing. You're like, hey, I'm this far out, I'm going to do this. Okay, I'm this far out, I'm making this turn. Mm-hmm. You got to report everything that you're doing so that everybody else around you is aware where you're at, what you're doing. Versus if you have an air traffic controller, the air traffic controller is guiding you in. Hey, you see that Cessna about 5 miles out? Yeah, follow right behind him and clear to land. Versus it's more self-orchestrated.
Yeah.
But I say, like, sometimes I look at my GPS, I see an aircraft coming in. I'm like, hey man, what you plan on doing? Oh, I plan on doing this and this and this. Okay, cool. All right, I'm gonna do this. And then, but sometimes people are maybe not as competent.
Or you're assuming that someone's going to do this, and so you don't.
Yeah.
That's
So
a disaster.
and it's and people do, I've seen people do some stupid stuff, man.
Yeah.
Yeah. I'm like, how the hell do you have a license?
Yeah. Wow. And so you have to really make a big mistake to lose that license, though. Unfortunately, you're probably going to really hurt somebody or yourself. To lose your license.
Like I would say for you to lose a license, like anything when it comes to substances, that's super easy to lose your license for. Of course, but when it comes to mistakes, the worst gut feeling thing you can hear from air traffic control is like, yeah, I have a phone number for you to copy.
Oh gosh.
You have to self-report yourself, which depending on how bad you did, let's just say that you took off without clearance on an intersecting runway from another airplane. Yeah, that's you practically trying to commit suicide.
Yeah.
That's like, if the FAA gets involved, yeah, bro, you're done. But
and if you didn't self-report, is somebody actually silently reporting though too?
Oh, they have to, yeah.
So
they keep
when
track
you
of that stuff.
self-report, you're really just
No, you tell them what happened, and then they go like, oh, like don't do this. But like, if it's a major fuck up, like
could be like a fine or
no,
just lose your license.
Lose your license.
Yeah,
Yeah, you're a hazard.
Yeah.
But it's awesome stuff, man. I gotta tell you something that's really cool. So whenever you're flying, the winds play a huge factor, and there's headwind and there's tailwind. Tailwind pushes you, headwind hits you, right? Hits you on your nose, which slows you down. So I was having a flight with my instructor at 6 a.m. It was closer to wintertime, so the sun wasn't quite up yet.
Mm-hmm.
And we were looking at our airspeed. And because we were about 3,000 feet above Cape Coral, but we had a headwind of 60 knots. And my instructor said, my controls, watch this. And he just pulled the power back, and we matched the speed of the wind, and we were standing still.
Oh, that's cool. Yeah.
We were standing still. And then I was looking at over veterans, and I see the cars just passing by, and we're just...
That's wild.
And I'm like...
Just like a bird in the air. Just like a bird in the air, man. That's
and I've seen it too, where then he pivoted us, and then the wind just started taking us. Like I was seeing like Cape Coral, like a panoramic view.
Yeah.
And it was like a tape, like a film tape. It was just moving like that. And I'm like, whoa. And then he took a picture of it. Like he took a picture, sent it to his like flight instructor buddies. He's like, okay, your controls. I'm like, okay.
Wow.
And I was like, that's the beauty of aviation, man.
Now I remember it was around the Super Bowl. I know this, but I remember you posted on Facebook. It was a picture. You're in the cockpit. I want to say it's sunset, and you've got Kendrick Lamar's new album on, and you've got a picture of it showing. What was the song on that album, though, that when you had it on in the plane, you were just like, this is the soundtrack. It's written.
Yeah, Squabble Up. Yeah,
Squabble Up. Yeah, I love that.
Yeah, Squabble Up. Or if not, I was playing, because I have a playlist, because you can actually like listen to music, like it's low, and then whenever like air traffic control pops in, it stops the music.
Yeah.
I was listening to Squabble Up, and I was also listening to like, that joint album with Kanye West and God, what's his name? Kid Cudi, Kid See Ghost.
Yes.
Okay, I played that entire album. I played I played GNX, that Squabble Up album. I'm a huge Kendrick fan, man. I'm a Kendrick stan.
I knew you were on that side of it though, because I said, okay, well, he's making the statement, but. They're two different artists, man. And I don't know. I honestly...
You talking about Drake and Kendrick?
Yeah, I almost go more Drake, man, just because radio friendly. Kendrick's a really smart rapper.
He's a lyricist.
He's really smart, man. And sometimes it's like, I want that more poppy, radio friendly.
I am more of... when it comes to music, because I love music, especially someone like Kendrick, that has these triple entendres, double entendres, and he has these abstract ideas. I love to dissect it, because it's like he's such a profound artist, and you're seeing the way the man thinks and his wordplay. And whenever I heard, because I know they've been beefing for 10 years, like it's been an ongoing thing, but whenever Drake went at Kendrick, I was like, Drake's finished. I said, like, I was like, I was like, he's finished, man, because Kendrick is a dog with rabies.
Yeah.
He came from Compton. He's from the streets. Yeah. He built himself up, and he's a master. He has a Pulitzer Prize, which is only given to poets.
That's crazy. Yeah.
Yeah. So you're telling me
smart.
Yeah.
Well, I know I read an interview where they said that when Kendrick Lamar met Eminem, Eminem actually kicked everybody out of the studio, locked him in with a pen and paper and said, right. Because he thought, you got a ghostwriter. You're not doing this yourself. And he did. And I think, in a different spectrum, there's a band on the heavy metal side that I've listened to in the past called System of a Down. And they're very political rock, very smart rock. And there's a place for it. But the reason I get back over to Drake is, 25 sitting on 25 mil. I mean, that kind of I love that kind of stuff. I love that radio friendly. Not even radio friendly, but just,
just more boppy.
Boppy, yeah.
Did you hear the diss tracks though? Because Kendrick even said in the first response, he said, keep letting me wave my hands and there will be no threat. He's like, stop playing tough. And then Drake, which he did to Pusha T, because Pusha T, I'm going to nerd out for a second. So Pusha T and Drake were beefing, and then Drake spoke about Pusha T's fiance, which you don't talk about man's woman.
You don't do that.
And then Pusha T got info from Kanye that Drake was hiding a son. And then Pusha T in a diss track exposed that he was hiding a son. And then Kendrick in the first response was like, listen, bro, don't go below the belt. And then Drake went below the belt, and Kendrick killed him.
That was it. It was it.
It was it.
Well, and then even they're on the same label, and the label came back and said, no, Drake started a fight he couldn't finish. Like the label basically
and then Drake started suing the label. And I'm like, dude, that's so anti-hip-hop.
Yeah.
So you got your ass kicked, and you're going to be a Karen about it? Take the loss, bro.
But yet all of them are making a ton of money off of it.
Oh, hell
I mean, these feuds, East-West, all of this has been for years selling records. And so it's really kind of every once in a while you see a little feud like that pop off in the local real estate marketplace where realtors are, going at it together. But we never have that. But I want to go back to the flight.
Yeah.
So when you fly out of here, you're flying out of Pagefield.
Yeah.
Okay. And because I know Jade and I have actually went and hung out at the picnic tables there right outside the fence, just kind of watching people come and go. But sunrise flight, sunset flight, what's your favorite time to take off?
Sunset.
Yeah.
Number one, it's the time. There's a difference between getting up at 4:30 in the morning.
Yeah.
And not only that, it's a great unwinder like this. Because I've had long days of work. I have a flight. And once I get that, I put my book bag on my back and I'm walking to the airplane. Everything else doesn't exist.
Yeah.
I'm focused on this. And it's like therapeutic for me because when you do your pre-flight checklist, you got to be so meticulous. And I'm just going through everything, and I'm just going through the systems, and everything's very tactile. You hit the switches, everything turns on like a Christmas tree.
Yeah.
And then it's a stress reliever for me. And then once it's like showtime. It's like showtime. And then I do my thing, and it's almost like your focus has to be so much on 10. There is no space for anything else. And that's why it's so therapeutic for me, because I'm very much like, if I'm into something, like I'm in the something.
Yeah.
And it's one of those situations where, like, dude, I've had situations where deals were going bad and I was stressed out. Like not stressed out to where I couldn't fly, because it's also like you gotta be mindful. But it's also like, didn't have a good day today. But once I get that boot back on and they have an espresso machine, I make myself an espresso. Nice. Oh, dude, forget about it.
Yeah.
Nothing can bother me. Nothing.
Now, and I don't know why this is, Nate, but every time I'm on the interstate and I'm switching lanes, for example, I'll look over my shoulder, I see the lanes clear, I look in my mirror, I see the lanes clear. And every time I go to make that turn, I'm just convinced that a semi truck is coming out of nowhere to just crush me into the back. Do you ever, as you're taking off on that plane and you're throttling up, you're heading down that runway, do you ever just think like, oh shit, this might go bad? Or do you just, once you're locked in, are you in, man? Because
you're in.
Yeah, I don't know.
You're in.
I don't know. I don't know how I would do piloting a plane.
No, and not only that, like there's standard operating procedures when it comes to, like, whenever you're about to take off, you have to have a briefing. It's like you got to know. So whenever you're flight planning, like whenever you're taking off Pagefield, you already know where everything is. But whenever you're at a foreign airport that you don't know, you got to look at everything around the vicinity. So number one is, okay, let's just say that we're taking off, engine quits, engine fire. What do you do? Easy. Turn everything off and just go off the runway, go to a taxiway or the grass. Okay, option 2, you take off, but you have enough runway. You put it back down. Option 3, you take off. You don't have enough runway. You make a U-turn, which is very difficult. Option 4, you got to know where all the roads are at. You got to know where all the fields are at.
Because those are runways.
Because they're going to be your runway.
Wow.
And that's why they tell you, don't wear sandals, wear shoes. Because it's not a situation like, oh, when it's going to happen, if it's going to happen. It's more like, listen, you're flying a piece of machinery. Anything can happen. And I'm not saying it to intimidate anyone, but you got to be mindful.
Yeah.
So it's like you
RTG.
got to be prepared. And it doesn't happen. It doesn't happen. But it could be you one day.
Mm-hmm.
So you got to be careful. You got to treat it with care and respect, because it's something that if you don't, it will kill you.
Yeah.
It's it's one of those situations where you cannot fuck around and find out.
Yeah.
Because you will fuck around and you might not be able to find out because you don't make it.
Yeah.
Right. So it's just treat it with respect and treat it with dignity, and it's a beautiful thing.
Yeah.
I want to get my helicopter's license after my pilot.
Now that would be cool too.
Yes.
That's when I think of being able to get where I need to be quickly. Helicopter always is the one that I think of. Like, wow, man, that sounds so cool.
Which is the flight school is right next to my my flight school, and there's a guy that has a hangar. He built a hangar, and he's got a private jet, a turboprop, and like a regular Cessna, and he's got 2 F-350s. And I'm like, who
are
is
you?
that guy?
Yeah.
I'm like, that's $30 million of equipment.
That's crazy.
And I'm like, dude, and that's when I realized, oh, there's money here.
Yeah.
I'm like, there's money here. And he just pulls out his planes and takes his family. I'm like, God bless, bro. Because I want the same thing. And whenever I see somebody successful like that, I'm like, listen, bro, like, that's cool. Like, that's cool.
You're not hating. You're congratulating.
You listen, if you want blessings onto yourself, you got to bless others.
Yeah.
So I'm like that. I'm like, listen, man, good for you, bro. Like,
now, if you wanted to go down to Key West, what's fuel? Like what? Like realistically, it's got to be a pretty damn good piece of key lime pie to go down for.
It's gallons per hour, so it's like
$500.
No. The rental rate on an airplane, one of those. I have to look back. It's $120, I believe, $130 per flight hour.
Okay, that's not taken off and afterwards getting your bags off. Yeah.
So.
And it's a 30-minute flight.
45 minutes. 45 minutes. So you're probably going to spend $2 something, but you're flying an airplane.
Fuel?
No,
fuel?
No, because
or you fuel is separate.
No, fuel's separate. But I think what they do is, if I remember correctly, when it comes to these rentals, is that it's going to be $130 per flight hour, plus 10 gallons. Yeah, plus 10 gallons of cost of fuel, and then that's what you pay. Yeah.
So, and can you fit
$300.
3 people in a plane?
Yeah, it's actually a 3-seater. Like
so
1, 2,
3 buddies going down. That's nothing, man.
Not only that, you're flying to eat key lime pie.
Yeah, Key West Express would be $149, I think, for around
4 hours.
And you're sitting on a boat with a bunch of other people.
Yeah. The only cool thing about Key West Express is that you can be drinking in the morning, right?
You might not be able to do that in the plane.
No, absolutely not.
Right. Yeah.
Yeah, you're gonna have some very nice people in suits coming to your house. Yeah.
Now, if you got 2 buddies that you're taking down to the Keys, are they free to?
No.
It's just cockpit's clean. We're not doing any.
Yeah, because here's the thing: is that a lot of these planes only have one door. So here's the thing: so I'm sitting on the left, but a guy sitting on the right. That's the door. If he's intoxicated and we got to bail,
I can't get over.
He can kill us.
Yeah. Wow, I never thought about that.
Yeah. So it's one of those, and not only that, and since these people don't know, that's why, for example, you can drink on a private jet, or you can drink on an airliner, because there's professionals guiding the people. But when you're by yourself, this is you with your boys.
Yeah.
And they're not very
like a boat.
Exactly. So you got to show them how to open the door, close the door, this and that. And while they're panicking, they might not do it right.
Yeah.
And imagine intoxicated.
Yeah.
So it's got to be sterile.
Yeah. Now, do you, in your experience, have you flown pitch dark?
Yeah.
And do you like that?
Yeah.
Yeah, because you see everything lit up down
below. No,
and
not only that, it's like, no, actually, I've flown, like, I went to Okeechobee one time, and dude, there's nothing out there. Like, it's just darkness.
Yeah.
Darkness. And you're just looking, like, you're just looking at your instruments, and you're like, shit, I mean, I hope this is right. No, because it's like, it makes you realize, like, the technology, and it shows me all the rivers and everything, because it gives you like a synthetic vision. So it's like you looking forward, and it shows you all the all the towers, like all the light towers in front of you and things like that. It shows you everything, and you're just looking at that, and you're like, man, this equipment is diabolical. It's like it's so cool.
Yeah, you know too much.
Yeah. It's like that's crazy.
Now the Alligator Alcatraz, the new detention center down in the Everglades, they've actually got a hell of a runway down there. It's just I think 1,200 feet shorter than RSW's runway.
I know exactly what runway that is. Yeah.
Have you ever seen it aerial? Have you ever seen it flying over the Everglades?
I've never flown that far. When it comes to going eastbound, I've sort of maintained myself west, but I know exactly what you're talking about. Yeah. The shortest runway I ever landed on was Everglades City. That's a short runway.
Okay.
That's a no like funny business runway.
You better hit it.
You better hit it. You better hit it. There's one time where I took a friend of mine because I was practicing short takeoffs and landings, and she was oblivious. She was oblivious what's going on. Because this is what happened. We hit full power. You pump on the brakes. You let the engine spool up to max power, and then we let go of the brakes. And we're running down the runway,
screaming.
And then the speed limit for you to take off on a short takeoff configuration is about 55, and we're barreling down the runway, and I'm looking, and it just 5150, 5150, 5150. It's not going above 51. And my instructor said, my controls, and we're approaching the end of the runway like that. And then we like hit the brakes, and the plane's like, it's like going like that. And then we stopped, and me and my instructor look at each other, and then we're like, oh, wow. And then we come back around, and then I talked to my friend afterwards, and she's like, oh, I had a great time.
Oh my gosh.
And I was like, so you did not know what happened there. We were almost in the water. And that's when I really earned even more respect. I said, if I was by myself and I would have dedicated 1 or 2 seconds more to make a decision, I would have been in the water.
Yeah, you could have been swimming.
And I was like, that's where I really respected it. I said, yeah, this is not a situation. This is not something that, So
how many hours do you have to train before they'll say
40? To get your license?
40 in the air, right?
40 in the air, yeah.
Okay.
Like you need 40 hours in the air to get the most basic license, and then there's other licenses that you get after that. Yeah.
Well, you love to fly. Have you ever thought about what it would have been like in a parallel universe where you were a FedEx pilot or a Delta pilot, And
I've actually toyed
Air Force, Space Force.
I've toyed with it, and I said, I've thought about this. You're the first person that I said this to, funny enough. I said, if I get to retire early-ish, let's just say like my company's running and I'm able to just be more hands-off, I said I go for it. I go for a later career type of thing.
That'd be cool.
And here's the thing. There's a lot of GCs that are pilots. There's a lot of mortgage brokers that are pilots. And there's a lot of realtors that are airline pilots.
Yeah.
But I don't know, man. Like there is still that little kid in me that's like me with my stripes.
Every day
walking up to the cockpit. And because that's one thing that's unfortunate is whenever I do get my pilot's license, I will never fly the Airbuses. I will never fly the Boeings.
Right.
And those are the things to me that's like, so, if that's the only thing like I want, like I like, yeah, it's just that little kid in me. It's like I've always wanted to fly an Airbus, like, just like get like, just sit down, turn on the systems and make sure everything's okay. And yeah, but here we are.
Well, let's say you and I left out of here and I was driving. You could comfortably get into my car and check your messages and, not really worry about what I was doing. But do you feel that when you hop on commercial, for example, do you find yourself just kind of like going through what you hear the engines kind of gearing up and you know what they're doing, or you hear that clunk, clunk, and something's coming down and you know what, so you feel like you're engaged now as a pilot, that you just think about it.
Oh yeah. Like that's why I always put myself on the wing, either a little bit, either in dead center, behind, or in front, because I love just hearing and seeing the mecha, because we're talking about a piece of equipment that weighs 200,000 pounds and carrying 200 souls. And then like there's sounds that I know that are loud. For example, like whenever the gear comes out, you're poof, like it's really loud. Yeah. And so people jolt and I laugh because I'm like I know what that is. Yeah. Like, okay. But it's just I just love I don't know how to explain that. I just love all of it. Anything aviation, I love.
Yeah.
Yeah, I love it. It's cool.
That's awesome. That's really cool, man. I'm glad that you can really work on something like that that's not work related. It's something that keeps you sane. It's something that keeps you honest, something that makes all the stuff that we do every day worth it. I mean, you go to work and you write loans for people, that's gas money.
Yeah.
That's flight time.
Yeah,
so,
exactly.
And I think that's really cool, because that's something that everyone wants to talk about.
Right.
Everyone wants to see the photos and the videos that you take. And I think for me, I work a lot. I have a small child. And if I'm not at work, I'm usually trying to do something around the house or catch up with my life. And I've always been a fisherman, a kayaker. I like the beach and the water, but it's a commitment to sign up for something like that. And so while there's stuff that I've thought about in my life, I go, I'd really like to do that. I play guitar. So every once in a while, I'm like, you should really pick up the guitar and play it a little bit. But we just get busy with what we're doing. But yeah, you managed to do all of this and you scuba. Is that right? Are you scuba?
I not as frequently as I would like to, but yeah, I got my certificate. Yeah. Because I said to myself, there's one thing that I would like to say is whenever it's my time and I get asked, what did you do with it? I want to say every opportunity you gave me.
Yeah.
I want to take it all of it. Like when it was like scuba, flights, because I don't know how much time I have.
Yeah.
And it's one of those situations, like ideally everybody wants to be 85.
Sure.
But hey, that's the movies. But I want to live a very full life. And by me doing these hobbies and and meeting great people like you, it makes it all worth it.
I appreciate you saying that, man. And I appreciate you coming on to the show. We've had a lot of time to talk today, but not enough. But I got to let you go because I got to get on. I got to get down the road myself. Yeah. But hey, listen, I wanted to let everyone know, if you haven't had a chance to yet, check him out online. He's got a great business here in Fort Myers. He's been a great friend to me, and I'm glad to have him on the show. If you need a mortgage, if you need advice, if you just need someone to talk to about your game plan, I'd like for you to reach out to him, and I'll put all of his contact information here and down below. And then I wanted to remind you, if you're buying, selling, building, refinancing, or doing any kind of a deal in Florida, tag me in. I'm your local, licensed, and available title agent. I'm here to help any way that I can. Thanks again for hanging out. Make sure you subscribe to our channel and check us out for future episodes. Nate, thanks for coming on to the show, man. I can't wait to have you back. What a great time. All right. That's a wrap on Title Adam in the House. Subscribe, share, and tag in Title Adam when it's time to close. You want to be a guest? Book your spot. The link's in the show notes.